Good afternoon, everyone. This is Lady Dragon speaking. It is Sunday, January 19. It is now, what time is it? Well, almost 3 o'clock, 2:57. That will be the last keynote we're going to do today. We'll finish the rest this week. Bon, c'est le dernier keynote que je vous importe aujourd'hui. On va finir le reste cette semaine. Bon, c'est avec Circana. C'est Navigating the Consumer Tech. Enjoy. Sam, ici. Sam saying hello. Check Sam, on va écouter ça.
Good afternoon, everybody. Thanks for joining us for our talk today. I'm sure many of you are very tired. It's been a long first day, still a lot to go. So we thank you for your time and attention to hear what we have to say. We're going to talk a little bit today about how Circana has viewed the market of the past 12 months and as we look ahead to what to expect in 2025. My name is Paul Gagnon. I am the industry advisor for the tech sector at Circana.
I'm Ben Arnold, Executive Director and Industry Advisor for Consumer Technology at Circana.
Ben wears a lot of hats. He covers a lot of categories. So just as a reminder, Circana, we track the complete consumer. We track over $3 trillion worth of spending across 8 different industries worldwide. We're here to talk to you today about tech, but we cover many different categories of products from CPG to general merchandise categories. Here's a list of what we're going to talk about today. We're going to take a quick rewind look back at 2024. We're going to spend a little bit of time reviewing some of the highlights from the holiday season that just ended, and then go through a few topics that we think are really important to pay attention to for the consumer in 2025, some of the interesting observations we've had about behaviors in 2024, and then spend a little bit of time looking ahead for the rest of this year. So first, I'm going to talk about a little of what we've seen in 2024. Now, it's been a tough few years in the tech business. In fact, up until the third quarter, we had more than 8 straight quarters of year-over-year decline. Now, there were a lot of people that purchased products during the pandemic, during all those lockdowns back in 2020 and 2021, but they don't need to replace those products every year. In some cases, it might be 4, 5, 6 years before they replace some of those purchases. So as we've gone through this period of consumers pulling back from spending on products, tech products, and spending more on experiences outside the home, we've seen a bit of a dip in sales. But very glad to see that we've returned to growth. We saw 1% growth in total spending in the third quarter for consumer tech in the US. And as we're going to talk about in a little bit, the holiday season has actually been surprisingly good. When we look at spending, we track technology dollars across all of North America. That includes not just the US, but also Canada and Mexico. US is the main driver of consumer technologies across the region, accounting for around 85% of all dollars spent on consumer tech in North America. Total dollars year to date through November for the year are down 1%. They were up 1% in Q3, but cumulatively through the year through November, down 1%. Canada has also seen some similar struggles for consumer spending, not too unlike what we've seen in the US, but the Mexico region has seen phenomenal growth. And that's not just in 2024. We've seen this growth for the last 4 years or so. So it's not just, you think about mature markets like the US or Canada, very high device penetration rates. Part of North America, Mexico, has relatively low still device penetration rates. Lots of room for growth. There's been some increase in income in Mexico, and we've seen a really strong boost to sales in Mexico as a result. So let's take a little bit of a look at the shape of spending in 2024. And this is one of my favorite ways to look at how spending is behaving versus longer periods of time versus more recent periods of time. And what this tide trend chart, I like to call it, looks at is how has spending improved in more recent time periods as we compare that against the last 12 months. So each of these lines represents either the last 12 months, 6 months, 3 months, or 1 month. And what we're looking for is for growth up and to the right. The better a category is performing in more recent terms really shows some momentum, some positive swing. And most of these core categories, these are kind of the categories of products that account for a big bulk of sales, have been moving up and to the right. So we are seeing improvement in quite a few different categories. We've also seen gains in the types of share of channels that retailers are selling consumers products. We've seen an increase in particular in e-commerce sales across US retail over the last 12 months. Tech in particular has one of the highest rates of e-commerce sales, around 62%, and that's up a couple percentage points from a year ago. So during the pandemic, we did see an increase in sales online that has continued even into 2024. So just a quick look back at kind of the key themes for the core quarters that we've experienced so far in 2024. In Q1, that was characterized by what we typically see post-holiday season, a lot of Super Bowl sales, big focus on big screens. It was a tough quarter. Year-over-year sales growth for AR/VR products was pretty strong. That was the highest performing growth category in Q1, but tablet sales were down. I think a lot of people were anticipating a refresh to some of those products that were about to come, pulled back a bit in spending. We also saw that the tax rebate season around February through April was a little bit softer than a year ago. The picture started to change though in Q2. We saw the tablet refresh finally come in May from Apple, and that drove a huge boom in tablet sales late in the quarter. In fact, actually, all those declines that we saw in Q1 for tablets were more than made up for in the second quarter, most of that coming in the second half of the second quarter. PCs are also a really important category and one that we've been waiting for a refresh cycle to kick in on. It's actually one of the fundamental things that's going to drive market growth over the next few years is that PC refresh cycle to kick in. But it was tough in the first half of the year. Total computer sales were down about 5%. But we also started to see some signs of life in particular communities. The creator community is a very interesting one. Ben really looks carefully at it. And we've noticed things like digital imaging camera sales really strong all year long, and that really accelerated in the second quarter. When we get to Q3, now we're talking about the back to school season. And this is a really important period for a lot of IT-related products, tablets, PCs, related items. And that's where we started to see growth. That's when the PC category really started to show some momentum, and that helped spur sales. And we also look at a category like TVs, which kick off for football season. College football is often a very important time for TV promotions. And we did start to see that, and we saw some unit growth in the third quarter for TVs. So even though TV dollars were down, units were up on a positive basis, and tablets remained strong. But what about the fourth quarter? Ben's going to talk a little bit about what we saw in the holiday season that just passed.
Well, as we know, the holiday season is key to consumer technology sales. In order of 50% of the sales volume is done in quarter four. And when we talk about success in 2024, part of that story is a strong holiday season. A big focus for the holidays, of course, is Cyber Monday and Black Friday. And as Paul talked about the strength in quarter three, that flowed into the holiday sector this year and really put us over the top in terms of growth in consumer technology. When we look at the performance of Black Friday in 2024, revenue was up 2% compared to the year prior, and sales had been declining since 2022. Cyber Monday was a little bit stronger, 5% growth over the year prior. So the holiday season really kicked off with a lot of strength and momentum starting in quarter three. But I'll also add that part of that story has been a refresh in products. Paul talked about new tablets, certainly new headphones, true wireless, AirPods getting refreshed, all of those other categories. We saw new products come into the market and consumers respond by investing in those products. So I think the success of the holiday season has really been about compelling product stories for consumers to invest in, but also a measure of consumer confidence that I've now got the economic stability to invest in more technology products. And as we look at the weeks going through the holiday season or the quarter four, what we saw was even though sales got kicked off kind of soft, in the second week of October. Prime Week was strong. We got into the meat of the holiday season after Black Friday. December week 2 up 14%. December week 3 up 20%. We finished off with Christmas week up 31%. So we really ended the holiday season on a strong note. And again, this is a combination of great products for consumers to buy, but also the confidence in their economic situation to invest in those products. And I might add, Paul, we talk a lot about purchase cycles, a lot of those purchase cycles coming back around. It was 2020 and 2021 when we saw a surge in PC sales. A lot of those PCs are getting old, older generations, older components, and it's time to refresh. And so that is also part of the story this year. When we get in a little bit deeper into the categories which performed well this holiday season, wearables and health tech are right at the top. And we saw a strong surge of sales of smart rings, right? The new form factor for activity trackers on the market, really captivating consumers' imaginations. Party and tower speakers, if you have one of these products, you have people over, it's a big karaoke machine with lights. Those products sold very, very well this holiday season. Camcorders, a piece of that creator story that Paul mentioned that we've been staying on top of, also a big mover this year. And then lastly, I'll mention stereo headphones, which had a very strong holiday season with a lot of new products coming into the market, a lot of premium products that consumers were investing in, and that really helped us get over the top in terms of growth for the holiday season. Now, we all pretend like we're shopping for technology during the holidays because we're buying gifts for everybody in our families, but we know that's not 100% true. We did some consumer work to understand the nature of consumers' technology purchases during the holidays, and what we found is that there are a lot of people self-purchasing, right? Self-gifting technology products. So we asked consumers who are buying technology, not necessarily for a gift, who are these purchases for? And 47% said that it was a product to treat themselves, right? The self-gift. But 38% said that it was a needed product refresh or something to replace an older product in the household. And that's really a key metric that we've been looking at as we try and understand the consumer technology market, is how much of these products are repurchases, time to upgrade the product, and a very high percentage of consumers said that their technology purchase during the holiday season was a needed replacement. And again, as we talk about innovation in the next section of our presentation, that is one of the things that is driving replacement and repurchase cycles. AI capabilities on PCs, better sound in headphones, more intelligent features built into smart home products. These are the things that get consumers out and buying more products, and exactly that's what we've seen in the marketplace. We also know that there's a measure of caution out there, and one of the things that we are keeping an eye on is how are people postponing sales of technology products in anticipation for promotional events. So we've done some consumer research to understand purchases during Black Friday and Cyber Monday. To what extent are those delayed purchases in anticipation of a discount? 50% of tech purchasers during Black Friday and Cyber Monday said that they postponed that purchase from earlier in the year. And the main categories that they purchased: smartphones, headphones, TVs, a lot of, again, products that get refreshed on a fairly regular cycle, but also categories that have been highly promotional this year. So these consumers are not wrong by waiting for the promotional time to invest in these products, because sales this year were very, very strong. Next, we'll take a look at the focus on value.
So I'm going to talk a little bit about some of the behaviors that we've seen on the part of consumers and what they're choosing to buy when they make those choices. One thing to keep in mind is, inflation has been a consistent story for a while now. And it's not just inflation in a given period. So this data right here looks at the inflation. This is government statistics from the US government, looking back at how much the prices for a lot of the things that we have to buy have risen compared to 2019. So the idea of cumulative inflation, or inflation over the post-pandemic period compared to the pre-pandemic period, and it's significant, 23% increase in overall average inflation since 2019. And importantly, wage growth hasn't quite kept up with that. So what that means is that on a real spending power basis, consumers have felt the pressure. And especially in some of the really important categories that really aren't necessity or aren't optional purchases, they're necessities like shelter and food. And so this affects how consumers think about their purchases and what they decide to buy. We did this consumer survey research where we wanted to understand how consumers felt about their own personal financial situation and how does that compare against their perception of the overall economy. It's a big difference, right? They feel fairly good about their own personal financial situation, but they think broadly the economy is poor. Now, perhaps that's because of an election year, a lot of news around the economy kind of affected their perceptions, but bottom line is they had to make careful choices because they weren't sure how the economy or their own personal financial situation might change in the future. What we saw was that consumers were heavily influenced by pricing pressures. 77% of consumers felt that prices were higher than expected. I'm not sure any people think, oh wow, these prices are lower than expected, but 77% said they were higher than expected. Importantly though, an almost equal number of people decided to wait for the items that they wanted to purchase to go on sale as those who decided to make the purchase anyway. So there are consumers out there who are willing to still buy even if they think prices are high, and yes, their financial situation might be a little bit better off, but a large group of consumers have been okay waiting for sale promotion periods, and that's what we've seen this holiday season. Another important aspect of this whole discussion is, what is value? You know, when we say that consumers are shopping for value, what exactly does that mean? Does that mean they're only looking for the lowest price on products? In some cases, probably. But it also means that they're looking for products that are going to deliver a quality experience or be a long-lived product that they don't have to worry about replacing quickly because it broke. So quality is a more important aspect of value. And I think as we look at the industry and how manufacturers bring products to market, really important to keep this in mind, that it's not just about the absolute cheapest product, but an equal balance between price and quality. What has this led to? A lot of behavior, what we call trading down behavior, that we have seen across many industries. You know, I mentioned earlier that Circana tracks spending across a huge number of different industries, not just tech products. And what this chart shows is what share of sales in a given category are from value price points, or mainstream price points, or even premium or super premium price points. And how has that changed? And what we've seen is a lot of movement out of premium and super premium price points into more value-oriented price points. This is true in tech, but it's also true in many different industries. In fact, almost all industries are seeing this trade-down behavior. Consumers are clearly price sensitive, and they are making selections on products and brands to keep that in mind, especially if they think that the products can deliver at least a similar level of quality in that whole value equation.
So next we'll look into some examples of innovation that we are seeing consumers respond to and seeing sales and dollars put against. This next slide looks at a couple of categories which are not necessarily new products. Maybe we would group them in the category of, emerging in some cases, but a lot of these products were on the market last year. Many of them were on the market years before that. But we've seen stronger sales in 4 of these 5 product categories in 2024 compared to 2023. Open ear headphones are products that you will see all over the show this week. And that is a category that has been around for a while, bone conduction technology. 2023, unit sales grew 51%, but they jumped to 110% in 2024. It's a story about new brands getting into that market, Bose and Sony, and building up awareness and more diversity in terms of price points driving these products. So stronger sales of those headphones in 24 compared to 23. On and around ear headphones have been on the market forever, and we've seen 20% growth in that category. You know, maybe we can term that a mature category, but the marketing around sound has come back and consumers are responding. Smart locks are I might call them a nascent category in the smart home space. Sales grew 5% in 2023 from a unit basis, 9% in 2024. Again, another story about awareness growing amongst consumers, more brands, more device form factors available, and driving sales for that category. And then the last two here, I mentioned the success of smart rings and fitness trackers, growing 1% in 2024. Not a huge growth, but that's off of a 16% decline in 2023. Another category that has been reinvented by a new form factor and everybody's interest in rings. And then lastly, very big TVs, 77 inches and above TVs, the kinds you see at only specific retailers, grew 24% in 2024 compared to 16% in 2023. So we put this in the innovation section because there has been some innovation in features and how some of these products are marketed. But it really shows that even though they've been on the market, these categories can have things added to them and appeal driven through them and really grow sales the year after fairly level sales in 2023. I mentioned open ear headphones. And again, that will be a huge audio story at CES. Open ear headphones grew 80% in 2024, and we've seen an emergence of the true wireless form factor in open ear headphones. If you are aware of open ear headphones, the big idea is that you're able to hear the music coming through your headphones, but also be aware of your surroundings. So a great use case for running and fitness, but also just for regular commuting. This is a case of consumers becoming more aware of this category, some big brands taking an interest and really leveraging their brands in these areas and helping to drive sales. And this is one area that we are looking at for growth in 2025 and beyond. So another story about innovation, this time innovation interpreted as new features as opposed to new brands or looking for new types of consumers, really impacting the market. VR is a really interesting category, and since we're the data gurus and looking at sales of these products, one thing that we take away from the VR market is it's very driven by new product announcements and comparisons this year against last year's last generation of products. And one of the stories with the VR market has been a push upward in terms of price in the products. And what we've seen in our data is that high-priced VR, expensive VR, has not done very well in the market. And what has driven more sales is more moderately priced, between $300 to $400 VR products. That's really the sweet spot for driving sales volume. The look here is just a distribution of the dollar share by pricing segment. And really the short insight here is that when we look at the dollar share of VR products priced between $300 and $500, that was about 51% in 2024, whereas VR products priced between $400 and above, and especially the $500 and above segment, accounted for almost half of the dollar volume last year. What we're seeing as we look in through the lines is that lower cost VR does much more volume in the market than higher priced VR. And so this is a market that I think acts a little bit differently, taking into account Paul's discussion about trading down, premium segments versus entry-level segments. the VR market has not shown that it loves premium products just yet. The VR market tells us that products priced between $300 and $400 are really what consumers want. So another interesting view on innovation. When we talk about VR, we've got to talk about smart glasses as well. And another product category that you're sure to get your fill of this week at CES. We're tracking smart glasses sales at Circana. On the left side is just a look at purchase intent for smart glasses. We did some consumer work through our connected intelligence service to understand how many consumers are interested in buying smart glasses. 22% of consumers who are aware of smart glasses said that they are interested in buying a pair, with 70% of those consumers saying that they expect to buy within the next 6 months. We look at some of the smart glasses on the market now. There aren't a lot, but there are some very big brands out there like Meta, right, very recognizable to consumers. And as that category gets more awareness, we're really looking at sales ramping up in that category. Looking at the right side of our chart is just a view on how sales have performed over the last 12 months. And 227% dollar growth for smart glasses in 2024 compared to a 29% decline in 2023 when the market was very different and basically limited to glasses with speakers in them that acted like headphones. So now we have innovation in the form of cameras and AI built into the glasses. And all of a sudden, we've got a whole new product category engaging consumers, and almost 1 in 5 or more than 1 in 5 consumers saying that they are interested in buying a pair of those glasses. Creators are also going to be a huge story at CES this year. And we are tracking the tools that creators are leveraging for their digital wares. And when we look at how that is manifesting in the data on the left side of this chart, camera sales are up in point-and-shoot cameras, camcorders, and mirrorless cameras. High price point, low price point, there's growth at both ends, which is remarkable because as long as I've been doing this job, I've not ever seen point-and-shoot cameras grow year over year. When we look at who is driving the sales of these digital cameras and digital imaging products, yeah, it's a lot of older consumers, more affluent consumers, that makes sense. But we also do see some pops around the 35 to 44 demographic, which could be consist of a lot of creators, but also a lot of kind of life stage, parents and things. So that is who is driving sales of digital imaging accessories and cameras. And then lastly, on the right side, through our checkout service, we're able to understand what consumers are buying in the same market basket. So when we look at what other products consumers are buying with cameras and digital imaging accessories, memory cards come up to the top, T-shirts, which is kind of interesting, which tells us that cameras are a little bit of a lifestyle category, right? We buy cameras when we're about to go on vacation and have other life events. So we do see products other than technology products in that market basket. T-shirts, I think there's portable beverageware somewhere on the chart. Anything that you might be buying as you go on a trip or set into an event that you also might be buying a camera with. Smart home is absolutely an innovation category, but I think that as the category has been on the market for several years now, we're kind of hitting a lull in terms of the consumer demographic interested in buying these products. This is a chart just looking at our sales data on security cameras, smart lighting, smart displays, all those types of products. And what we see is some flattening of security camera sales and some softness in the smart doorbell sales. But what is driving the category now are smart lighting products and a new segment in that category with the smart strip lighting is helping to drive sales there. And also, as I mentioned earlier, smart locks. 13% growth in the smart lock category as kind of that next iteration of security devices for the home. And one thing that we know about the smart home market is that consumers lead with security. They buy security cameras and smart doorbells first. So with that in mind, we fully expect smart locks to be one of those growth categories for the next couple of years. But outside of lighting and smart locks, not a whole lot of growth elsewhere in the smart home market, which to me says it's ripe for some innovation, either with new consumers or new features. And to that end, we are seeing innovation in security cameras and that security space in the form of AI. On the left side of the chart, we ask consumers through our Connect Intelligence service, why are you paying for the monthly service subscription on top of your security camera or smart doorbell, right? Many of us with those products pay the monthly service to have unlimited storage and to be able to search our footage for different events. What's lower on the list are specific notifications. So yeah, third on the list is package delivery notifications, but further down are notifications for specific events that sometimes you need AI features to help you discern. But we are seeing with AI applications like Gemini AI, Apple Intelligence, which I think could be leveraged in this way, the ability to describe to users what is being shown on the camera. So a Gemini AI will tell you not just that a person walked past your lawn, but that a kid in a red sweatshirt riding a bike just went past your lawn. So giving you really natural language, intuitive descriptions of what's being shown in the footage. And that absolutely is an innovation in this category, but also another reason for consumers to not just buy the device, but to subscribe to the service on top of that device on a monthly basis. Go through the build on this one for me, Paul. Something that triggered a thought was a rebirth in e-reader sales in our data. And looking at the 12 months ending in November, what we saw was that e-reader sales were up 64%, which again is not something that we've seen in our data for a really long time. So it just got me thinking about legacy technology and to what extent are people still kind of buying older technology. But first, just a quick sidebar. The first e-reader, the first Kindle came out in 2007. So just to ground us in a little bit of this legacy discussion. So that was when Amazon released the first Kindle. The first iPhone came out in 2007. First Android public beta. Google acquired YouTube, which seems like it has been forever. IBM created Watson, and Airbnb was founded. All these things happened in 2007, just to kind of ground us in how long ago the first Kindle came out. But e-readers have returned to growth with some new products, right? Again, another story about innovation. Note-taking devices are part of our e-reader coverage, so that's driving sales. Point-and-shoot cameras, as I mentioned earlier, had not seen growth in that category since I started this career. 29% growth on a dollar basis in the 12 months ending in November 24. Instant print cameras, right? A throwback to the Polaroid. These devices have been around for a while, but have had stronger sales here in 2024. Another story about kind of throwback technology. And then two categories which did not grow over the last 12 months, but actually didn't decline very much, maybe declined 1 or 2%, which is surprising given kind of how old these two products are. Wired headphones, we're still selling almost $500 million of wired headphones in a year's time. And turntables, anybody who's an audio connoisseur knows that vinyl is back, and turntable sales, while they didn't grow significantly in 2024, like I said, down a couple of points, almost $150 million in sales in 2024. So just a counterpoint to our discussion about innovation and the fact that a lot of more legacy and mature technology products still have a lot of appeal with consumers.
speaking a little bit of not necessarily legacy, but cutting edge technology, let's talk a little bit about AI. So AI clearly impacts a wide range of product categories and in many different ways. And I think one of the things as a research company that this is a little bit difficult to track is, what do I mean by AI? Is it AI built into the device in some way, so-called on-device AI, or something that can connect with a cloud-based AI service? And the answer is both, right? And a lot of these product categories that I'm showing here have some blend of the two. And it makes it a little bit confusing, I think, for the consumer. So education is a really important aspect of unlocking that growth in AI. Ben talked a little bit a second ago about smart security and other kinds of smart home services. And a lot of those services are tied to enhanced AI capabilities. AI is integral to a lot of these services. And what we've seen is that while the hardware sales for some of these product categories aren't necessarily strong, we are seeing consistent growth in subscription services that people are paying for. And a lot of those services are enabled by AI-based capabilities. We do a ton of consumer survey work around a lot of different topics. And what's interesting is that when you ask consumers what they use AI for, it's many of the same things that we would normally just type into like a Google search bar, right? So they're trying to search for answers, get recommendations. But what AI also can help with is productivity, right? And we do see that consumers number 3 and basically number 3 through number 5 are assistance with productivity tasks, helping shorten the time to complete a task. And while not anywhere near as popular as the top 2 answers, there's a really big difference between people using AI to search for answers and those using it for productivity. There's a lot of room for growth here. We also survey consumers because I think one of the things that as we talk about AI in an area of intense interest and innovation here at CES is not everybody is going to be interested in AI. And some people may be actively disinterested in AI. We've seen growth in the use of AI. So this survey set on the left looks at, have you ever used a generative AI product? We surveyed consumers back in Q2. We did it again in Q3, and there was a little bit of an increase. The number of people willing to try or interested in using generative AI products is higher than that amount. So 47% have used AI in Q3, 57% were willing to try it. So there's upward opportunity. But what's also true is that we saw the number of people who are not interested in AI go up from Q2 to Q3. And perhaps that's a little bit of a flag to say, not everybody out there is 100% vested in AI. Either the education to explain what it can do for you is important, or perhaps having a product offering that doesn't include some AI capability just to handle those concerns. And in fact, actually, consumers have quite a few concerns when it comes to using AI. Number 1 are privacy and security. That number went up a little bit from Q2 to Q3. Too many unknowns with the functions and capabilities. That may just be an education hurdle to overcome. Don't want AI being a decision maker for me. I think one of the big trends in AI is talking about agentic AI and having AI actually complete tasks on your behalf. There's a third of people who maybe aren't interested in that. So really being mindful of the fact, and there's big demographic differences, by the way, in these answers as well, being mindful of the fact that, all-in AI isn't always for everyone. One thing to keep in mind too, and we're actively doing this, we just launched an AI PC forecast this last quarter. And thinking about AI and the role in particular of PCs, a very big trend here at CES has been for a little while, is where does that innovation lie on the refresh cycle curve? So we have overlaid the innovation cycle with the refresh window for PCs. And the great news is that they align very well. So we're just starting to see AI PCs and AI-capable PCs launch at a time when consumers are already refreshing their products. And so it probably shouldn't be any surprise that we expect to see AI PC proliferation grow. But not all AI PCs are the same, and we recognize the fact that some AI PCs are going to have capabilities that are mostly cloud-based. Some are going to be really heavy in on-device hardware to enable local AI processing. but there's going to be a blend of the two. And at the end of the day, any PC that can connect to the internet can connect to AI, cloud-based capabilities.
So looking ahead in 2025, we want to leave you with some forward-looking thoughts. We are forecasting a 2% growth in the United States tech market, which is an awesome development, really being driven by stronger consumer confidence, strong first half growth, our holiday getting us off to a very good start for 2025. We're looking at key categories refreshing like PCs, headphones, and activity trackers will be a big story of that. Consumers will be focused on value, and so promotional events will continue to be extremely important, and being very strategic in how manufacturers can leverage those events, I think will go a long way towards driving sales. And I'd be remiss if we didn't mention just the specter of things like tariffs and trade policies and the potential for that to dampen consumer demand. It's a little bit of a wild card at this point, but we are factoring that into our expectations and looking forward, even as we don't have a lot of information on it just yet. But our forecast, 2% growth for tech sales, a great story. 5 categories that we're looking at to drive growth in 2025. The upgrade cycle for notebook computers drive more than $873 million into the market. Refresh on headphones, new form factors, the focus on sound will be a driver for stereo headphones. Paul is our TV expert, and he says that steady growth in extra large TVs and OLED will help stimulate TV sales in the coming year. We know that there are new tablet products on the market, and that upgrade cycle will also be a big factor in the growth story. And then wearable tech, as we've already mentioned, new form factors and rings, AR, VR, smart glasses, smart watches, new products in these areas, really driving some more growth and more sales into the market in this 2025.
Ben mentioned something that I just kind of want to follow up with, an interesting bit of data that looks at some of the capabilities that we have at Circana to track what happens in other industries. And one of the interesting things that we observed back in late September, early October, when there was the port strikes, right? And there was a lot of concern that with the port shut down, consumers were worried about getting paper towels and toilet paper, maybe a little bit of pandemic trauma coming back up to the surface. And we observed that in the data. We saw it in the news, people shopping, looking to stock up on some products if they didn't think that availability was going to be good, and absolutely drove massive growth in sales for that very short period where the ports were shut down. And I only make mention of that because that might be on the mind of consumers in 2025. If they think that the availability of some of their favorite tech products might be at risk, or if there's a clear signal that the prices might be going up for those products, we could see some disruptions on when people buy, and maybe we're seeing a little bit of that this holiday season already. So a couple parting thoughts to leave you with. First of all, I think it's really important that retailers and brands execute on promotional excellence, understanding when is the right time to promote a product when there is the maximum amount of upside sales potential available. The next one is being media savvy. And at Circana, we have capabilities to understand and quantify media spend and its ability to lift sales. And we offer that just in thinking about consumer trends like creators, which are more of a behavioral trend as opposed to something focused on products or a demographic. How do you target and reach these consumers who are collating around a behavior? And very savvy media spending is one way, probably the best way to do that. It's also important to understand that if there are disruptions coming, have a contingency plan available. Have either extra inventory on hand, have some alternates in supply chains, just in case there are disruptions. Have a plan to react quickly to changes in demand, either upside or downside.
Evolving with retail, and we've seen growth in things like third-party marketplaces and more sales going towards those channels. So being in tune with how consumers are purchasing products and what are the most popular channels and retailers to partner with.
And finally, think strategically. Also one of the capabilities we have is to help companies understand what is the best long-term plan for success, pulling in all the different data assets that we have available. There's a lot of change coming to the tech market, and I think it's important to be strategic in your thinking. So with that, we thank you very much for your attention.
Thank you. Thanks.